Let's get some more on what to expect for the local market today. Evan Lucas from IG joining us from Melbourne. Evan, just in terms of the US earnings season there, some good news from a couple of those big names, the likes of Johnson & Johnson, Coca-Cola?
Yeah, it certainly was, and I think you've also got to throw in Yahoo as well. Yahoo was the first time we've seen in 4 consecutive reports they've actually seen growth. Very, very small, I will admit. It's only 1%, but that was ahead of their own consensus, which was 0.5%. So that was a good thing to see. They are certainly getting a very good kick by Alibaba as well. They saw 66% upside in terms of their revenue from their Alibaba holding, and that will be interesting leading into Alibaba's IPO, which is probably around about a month away. So it was good from Yahoo's perspective. It means leading into tonight, we've got Google. You've got actually a plethora of them out there. You've got Google. You've also got Bank of America, Merrill Lynch. Pretty sure Morgan Stanley are out tonight as well. You can see Amex, Visa, all of these really big names are out tonight, and that will be a huge driver. But was those earnings side, it probably propped up the US market because it was looking and trying to sort of push lower, but both Coke and Johnson & Johnson held it through the day. Yahoo aftermarket has jumped up almost 4%, so it does give it a bit more of a sort of an edge that it could be a better than expected earnings season, despite the fact that it is Q1 and it is affected by that weather, and Q1 in the US tends to be quite slow. So that was a good thing. It does give a solid lead to us here in Asia, but it's certainly not going to be a huge effector considering that GDP is all anybody is watching in Asia today.
Absolutely. What are you expecting, and how's the market positioned?
Yeah, and that's, I think, the interesting thing coming into today, having a look at how the market is positioned. I think what you saw yesterday, particularly out of the new money supply that came out on the results yesterday, that was interesting. It just shows that the PBOC, throughout all this talk about stimulus, throughout all this talk about China slowing down, continues on its merry way of draining liquidity. So that was an interesting development. They are continuing to sort of move away from it. Hasn't really, caused any major movements in their repo rates. So that is one good part news of this, but it shows that even with a bad print today, that they're not going to move. So it does therefore mean that the commodity space side of the world of that sort of trade is there. It also means watching our material space will also be another one out of it as well, because GDP, you're looking at quarter on quarter, consensus is 1.4, down from 1.8, and then you've got year on year growth. The median estimate is 7.3%, and the range is between 6.8 and as high as 7.5. And a lot of people are suggesting with what happened yesterday, it may even be worse than that median print. So you could even see about the 7 line. Now that would be one of two things, and that's why the market is positioned the way it is. You will see stimulus in the form of more infrastructure projects. The central government has made it very clear that's what they want to do. You could also see a situation where maybe they can't handle it because you've also got industrial production out today, and it will probably get drowned out by the fact the GDP number will be so big. But industrial production is again expected to fall maybe around about 9.8% year on year. That's a little bit worse, obviously, than this time last year when they were looking at around about 10% growth. So their industrial production is the other part to look at. If it is slowing down, you may then have to see them talking to the PBOC to slow down their current measures. So Asia will be watching that very closely. Watch BHP, watch Rio particularly, and FMG. They're the ones that will react quite heavily to this. And I think there could be bad news is good news reaction, because there will be an expectation of stimulus on infrastructure. Watching the Dalan futures, particularly the one in September. But if they move up quite quickly, you'll watch the rest of our market move up with it.
So, yeah, outlook though for the open at least, for the ASX 200, what are you thinking?
Yeah, the SPY and also ourselves, we're calling it up around about 9 to 10 points. So that is just shy of 5,400 points. However, again, I go back to the GDP print. There will be almost no major trade moves probably before 12 p.m. So you may see, muted moves. You'll probably see a bit of positive on screen as US earnings season filters in and the futures filter in. But I don't think you're going to see a huge volume trade until we actually see that GDP print. We mean also you'll probably see when the Nikkei opens at the same time at 10 a.m. our time, that it too will probably be holding the line until we actually get a read of where China is at, because it is so important to how the region works, how the tiger economy is tracking, and whether or not they are getting the kind of domestic demand they want, whether or not they're actually seeing exports move in the right direction. So all of that is going to mean that it's going to be very muted trading probably for the first 2 hours, and then after that you'll get a real understanding of where Asia is going to trade, and I think until then that's where you're going to see the movements being.
Evan, appreciate that as always. Looking forward to getting your reaction to that data.
Thanks.
Evan Lucas there from IG in Melbourne.